Welcome back to BitcoinDorks. Today, we're diving into the recent market slump and whether Bitcoin is bottoming out. Despite the turbulence, some analysts are signaling a potential turnaround. Let's delve into the details. In recent weeks, the cryptocurrency market has experienced a significant downturn, with Bitcoin and other major cryptocurrencies facing substantial losses. This downturn has been attributed to various factors, including regulatory concerns, macroeconomic uncertainty, and market sentiment. While the prevailing sentiment may be bearish, it's essential to examine whether Bitcoin has reached a bottom or if further downside is still possible. Understanding the dynamics at play in the market is crucial for investors seeking to navigate these turbulent waters. Amidst the market turbulence, analysts are closely scrutinizing various indicators and signals for potential signs of a turnaround in Bitcoin's fortunes. These insights offer valuable perspectives on the market dynamics and provide investors with critical information to navigate the volatility. One key aspect analysts are focusing on is Bitcoin's price action and its interaction with crucial support and resistance levels. Chart analysis, often utilizing technical indicators such as moving averages, Fibonacci retracements, and trend lines, helps analysts gauge the strength of these levels and identify potential reversal points. Sentiment analysis plays a significant role in determining market direction. Analysts monitor investor sentiment through sentiment indices, social media chatter, and surveys to gauge the prevailing mood in the market. A shift from extreme fear to cautious optimism could signal a potential bottoming out and a subsequent reversal in trend. Fundamental factors such as on-chain metrics, network activity, and institutional involvement provide valuable insights into Bitcoin's underlying health and long-term prospects. Analysts analyze these fundamentals to assess the resilience of Bitcoin amid market fluctuations and identify potential catalysts for a turnaround. The interplay between Bitcoin and other asset classes, such as traditional stocks and commodities, offers clues about broader market sentiment and risk appetite. Analysts examine correlations and market dynamics to understand how Bitcoin behaves in different market conditions and anticipate potential trend reversals. When contemplating the potential for Bitcoin to reverse its current downtrend amidst the prevailing market downturn, it becomes paramount to embark on a comprehensive exploration of the myriad factors that exert influence over its trajectory. This exploration encompasses a multifaceted array of elements, each contributing to the intricate tapestry of Bitcoin's price movement, sentiment, and overall market dynamics. These dynamics encompass a broad spectrum of factors, including but not limited to, supply and demand dynamics, investor sentiment, trading volumes, and market liquidity. Understanding the ebb and flow of these variables is essential for deciphering Bitcoin's price trends and identifying potential reversal points within the market cycle. Regulatory developments emerge as a critical determinant of Bitcoin's trajectory, exerting significant influence over market sentiment and investor confidence. Regulatory shifts, whether in the form of legislative initiatives, governmental policies, or enforcement actions, can trigger profound reactions within the cryptocurrency ecosystem, impacting everything from market liquidity to institutional adoption. Consequently, staying attuned to regulatory developments and their potential ramifications is imperative for gauging Bitcoin's resilience amidst regulatory uncertainty. In parallel, macroeconomic trends play a pivotal role in shaping investors' perceptions of Bitcoin's value proposition and its role within the broader financial landscape. Economic indicators, geopolitical events, monetary policies, and global market trends all contribute to the prevailing market sentiment and appetite for risk assets such as Bitcoin, particularly in times of economic uncertainty or currency devaluation. Bitcoin's scarcity and decentralized nature may position it as a compelling hedge against systemic risks, driving demand and potentially catalyzing a reversal in its price trajectory. Improvements in scalability, security, and usability, coupled with the development of novel use cases and adoption initiatives, can bolster Bitcoin's utility and appeal to a broader audience of investors and users. Similarly, advancements in blockchain interoperability, Layer 2 solutions, and decentralized finance, DeFi, applications may unlock new avenues for value creation and adoption within the Bitcoin ecosystem. One significant factor influencing Bitcoin's potential reversal is regulatory clarity. Regulatory uncertainty has long been a source of concern for cryptocurrency markets, with ambiguous or unfavorable regulations often leading to heightened volatility and market sell-offs. Positive news catalysts also play a crucial role in shaping market sentiment and driving Bitcoin's price action. Positive developments such as institutional adoption, mainstream acceptance, or technological advancements can inject optimism into the market and spark renewed interest from investors. Conversely, negative news events, such as security breaches, regulatory crackdowns, or market manipulation allegations, can dampen sentiment and exacerbate selling pressure. Institutional involvement is another factor that could influence Bitcoin's potential reversal. Institutional investors, including hedge funds, asset managers, and corporate treasuries, have increasingly recognized Bitcoin as a legitimate asset class and store of value. Their entry into the market, marked by large-scale investments and strategic allocations, can provide a stabilizing force and support Bitcoin's price during periods of volatility. Macroeconomic trends and geopolitical developments can have a significant impact on Bitcoin's price dynamics. Economic uncertainty, inflationary pressures, currency devaluation, and geopolitical tensions can drive investors towards non-traditional assets like Bitcoin as a hedge against systemic risks and fiat currency debasement. In times of economic turmoil, Bitcoin's scarcity and decentralized nature make it an attractive store of value and a safe haven asset. Technological advancements and innovations within the cryptocurrency ecosystem can contribute to Bitcoin's potential reversal. Improvements in scalability, security, and usability, as well as the development of Layer 2 solutions and interoperability protocols, can enhance Bitcoin's utility and adoption, driving demand and supporting its price over the long term. In conclusion, while the recent market slump may be daunting, it's essential for investors to maintain a long-term perspective and exercise caution amidst the volatility. While some analysts are signaling a potential turnaround for Bitcoin, uncertainty remains, and further downside cannot be ruled out. Diversification and risk management are key principles to mitigate the impact of market fluctuations and safeguard your investment portfolio. That's all for today's video.